Good morning, everyone. Well, ECB President Draghi yesterday repeated his recent tactic of holding out the promise of action in the future. This time, however, he upped the ante significantly with comments such as, "The Council is comfortable with acting in June." While we've heard him assert many times before the Council's readiness to act, this time he has willingly painted himself into a corner. If the inflation forecasts are revised down next month, as seems likely to me, and the ECB doesn't act, then Draghi will lose all credibility. The question then becomes what the ECB is likely to do. The structure of the Eurozone financial system simply doesn't allow them to take large-scale measures like the Fed or the Bank of Japan did. I expect that they'll take some modest steps that will have only a modest impact on the currency. The dollar also gained overnight against the Australian dollar after the Reserve Bank of Australia's quarterly monetary policy statement said that interest rates will remain on hold for the foreseeable future amid a fall in mining investment. I think it's only a matter of time before the RBA once again starts trying to jawbone the currency down as well. Just to show how much the currency picture has changed recently, Turkey and South Africa had to hike rates back in January to defend their currencies. Yesterday, their currencies made new highs for the year against the dollar. Dollar in Mexico also hit a low for the year. The supposedly endangered Fragile Five currencies have in fact been among the best performing currencies in the world this year. Spanish and Italian bond yields hit record lows yesterday. Carry seems to be one of the main themes of the market and is likely to continue to be in favor so long as there's no major upheaval from the Ukraine. The best performing G10 currency overnight was the Canadian dollar, which jumped after Canadian housing starts surged. It appears that many algorithmic traders are short EuroCAD and were scurrying to cover their positions as EuroCAD approached and then broke through 150. The market's also contemplating the possibility that tonight's employment data could beat expectations. The CAD looks like it's on a run for the time being. Not much on the schedule today besides the Canadian data. Germany's current account and Italy's industrial production for March aren't market affecting. The U.S. publishes the Job Openings and Labor Turnover Survey, the JOLTS report, for March. While not necessarily market affecting, it is worth noting as an indicator of the flip side of the labor market from the employment data. This shows demand for labor as opposed to the usual measure of supply. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.